Hello traders, welcome to my last live stream. It's the 1st of May and hopefully we can make it a good one, do some good analysis, find some good setups for you all. We're going to talk a little bit in depth about the Japanese yen. We're going to talk about a bit of the unwinding of that's going on right now. Just kind of like my theories behind that. We're going to look at some upcoming data as well, because we do have the ISM manufacturing PMI coming up as well for the US. So hello everybody, hope everybody is doing well. Hello to you, Vincent, you are very much welcome. Hopefully we can catch up soon, wherever I'm going. So I appreciate you viewing the channel and being consistent, being in the live streams and watching the videos, being a subscriber as well. So really appreciate that. So yeah, thank you. We'll get into some markets. Obviously there's been some really interesting developments recently. Obviously we talked about the strength meter on Tuesday, and there were some kind of setups that we were looking at in line with the currency strength meter. Things like sort of, trying to sell maybe the risk currencies, buying the risk currencies versus the risk off currencies. That seems to be playing out a little bit right now. One of the markets that I really like the look of going into today was Kiwi yen. So I ended up putting a position on Kiwi yen on yesterday's close. So I actually took a daily chart trade. That was a previous move that I was looking at. Actually took a daily chart trade here at the end of close yesterday. Put my entry just above the swing high, stop loss just below the swing low. Looking to see if this will continue to the upside. Other markets, so the only other live positions I had was a silver long that got stopped on my trailing stop. So that was where my stop loss was placed. On silver was just below this daily candlestick low, essentially below these 4-hour swing lows here. I was looking to see if this momentum would push back to the upside, try and take these highs. It didn't happen in the end. The market broke to the downside, so triggered my stop loss at 32.60s. So ended up taking 2 profitable trades out of the market here. The other market I was in was oil short. That has played out really nicely. This is the current position. I'm in on oil. Target, it was 55.50. Just a little bit lower here. Came very, very close to targets on oil. Basically just been trying to short oil as the news has been coming out around it. OPEC increasing output, concerns of a slowing US economy, all things kind of pointed to downside in oil. We were seeing a lot of talk of oil going back towards $60. So yeah, like the idea of being short. We broke the trend here, took a short position on this 4-hour candle, stop loss above the highs. This one is rolling down pretty nicely. The only other trade I took was a dollar Swiss. I was looking at 2 trades. I was looking at pound yen short, but that didn't play out in the end. Instead, we actually had a breakout to the upside. So I've actually taken quite a few yen positions. So I've not only took pound yen, Kiwi yen, I've also took Swiss yen as well. Only very small. I'm trying to basically average out my trades over those few and see if they'll take out. So I've only put 0.25% on each. So I have a little bit of exposure right now, but not too much. Also, what was the other market I liked? I really liked euro pound, but that didn't really get going. That hasn't got going. I have taken a position on this. I don't know why the trade thing isn't on here. But basically I bought that 4-hour candlestick high. Now my stop loss is 90 pips on this because of the daily ATR, and I'm looking to try and target back up at these swing highs. So I have actually took a position on euro pound, which is a little bit offside at the moment. So I'm in quite a few positions right now. We started to get kind of like a few good closes at the end of the week, or yesterday. which really kind of prompted me to get involved. And that was basically looking at these kind of closes here on the heat map, looking at all these different markets for potential ideas. So yeah, we'll go talk through sort of what my theory is behind the Japanese yen. I do have a bit more of an in-depth video coming out about it tomorrow as well, just to kind of keep it all segmented. So keep an eye out for that. So yeah, but let's talk about that. Hi Rago, hope you're well. Let me know, guys. I'll be interested to know, because obviously this is my last stream with you guys. I'll be interested to know from you kind of what is the favorite part of the analysis that you like. What do you wish you could have seen more of? You know, I'd love feedback, basically. So if anybody has any feedback about the streams, what you would have liked to have seen more of, what do you like in other content that you view? You know, I really appreciate just any kind of feedback in that kind of format. So please feel free to reach out to me, either via the chat or you know, via sort of other socials where you can contact me on. So yeah, feel free to do that. But let's talk a little bit about dollar yen. So yeah, you like the fundamentals. Currency strength meter is great. Okay, and that's something that you would want to see more of. You know, and if so, kind of in what capacity? I'd love to know. Pound yen, what do you think? Yeah, so pound yen's an interesting one. Obviously, on the currency strength meter, we've got pound as a strong currency, yen as a weak one. So naturally looking to buy that. So I have taken a position long on pound yen. We just go have a little look. This is the position at the moment. Basically saw this 4-hour breakout candle this morning when I got up. Ended up basically taking a position here, just above those daily highs as well. So I thought that if we weren't going to see that continual breakdown to the downside, then that breakout to the upside, we are going to see that kind of yen pressure. And that's really what I was looking at in terms of the COT reports going into this week, was the fact that we have this kind of aggressive, position held by hedge funds on the Japanese yen. It was just, when was that turning point going to be? Now, on a fundamental side of things, I actually don't like the pound. That's why I've kind of hedged my position. So if you think about it, I'm long pound yen, but I'm also long euro pound, because I like selling pound, but I'm more trying to take advantage of the yen weakness here at the moment. But if I go to the fundamental tracker here, and we just have a look at some of the data that we've had out of the UK recently, there's been a lot of, I would say, sort of poorer data. Now, the positive data is retail sales. Retail sales came in and beat forecasts. It was meant to be 0.4, came in at forecasts were minus 0.3. We came in at 0.4, so that was actually fairly positive, because if we're talking about a lack of growth in the UK, well, we should see a decline in retail sales. Now, technically, we have, right? Because we've gone from 0.7 to 0.4, so there is a decline here. But the problem is, it wasn't as dramatic as what was being priced in, which was maybe this kind of minus 0.3, or the forecast suggested. So that kind of gives a little bit of a relief to a market. We also saw some other positive things as well. GDP growth, which I still feel these numbers are slightly inflated, because we haven't really seen the impacts of tariffs just yet. But GDP growth also this month came in at 0.5%, which was higher than the forecasted of 0.1%, higher than the previous 0. So the two metrics that are kind of keeping the story of growth in the UK are that we're going to get poorer growth on X, Y, and Z. that story isn't really playing out right now because of the data that's coming out. Now, there are signs that we are seeing a bit of downside. If we take a look at the manufacturing and services PMI that came out recently, they came in under forecasts. Especially services PMI came in quite low. We've got a negative trade balance as well, but that data was from February 13th, so we need to see an updated data for that. We saw in March industrial production coming in lower as well. So there are factors out there that are supporting a potential sort of move. COP weekly change as well. So we actually saw a sort of increase or decrease in the kind of COP positioning. So that's quite interesting to see as well. And obviously where 2-year yields are trading around 3.9%, whereas the UK interest rate is at 4.5%. So bond traders are looking to basically price in rate cuts by the Bank of England. And, that's quite a substantial gap. That's probably two to three cuts that they're kind of looking at right now. Okay, so that to me is painting a bit of a negative picture for the pound at the moment from a fundamental side. We haven't seen that shift just yet when it comes to strength and weakness, right? So when we look at sort of pound Aussie, that has been a bit more bullish over the past sort of couple of days. Well, yesterday was a pretty bad day. Same with pound Kiwi. I liked this market to go short, but it's just not in the position to do so. Looks like actually it's more likely to trade higher. So I think maybe just a little bit early to the pound short at the moment. I do feel like it's coming, so it's something I'm going to be keeping an eye on, but we'll wait to see how this one really fully develops going forward. We haven't really seen it change here, right? It was at the kind of +5s, it went to the -1, but then it started to climb again and it started to become a little bit more bullish again. Cut reports are great as well, but it's the timing to execute. Yeah, so I do love the cut reports. I think they are super helpful. Personally, I think I've found some really good trading opportunities over the years using cut. But yeah, like you said, the timing of them is something that has to be worked into. But that's where the technicals come in, right? So just because the cut says, let's say, we'll talk about it now because Japanese yen is something that's on my radar. As a potential to short. Obviously I've got short, so I'm looking at ideas to trade that move. We can see on the strength meter that it went into these +5 areas and then went into -1 territory, so we can see that the Japanese yen is beginning to weaken. And if we look at the cut reports when it comes to Japanese yen right now, you can see I've already got it up, but we can see that hedge funds have been buying, which is what they do because they are trend traders, right? And you can see yen futures moving higher, right? So that's dollar yen downside, yen futures move higher. So they're buying into that move here. The problem we've got is they're buying at record levels, right? Now they've been doing that since, so really speaking, since we kind of broke that high here, right, that previous extreme, they've been buying into the market, right? So we've been in an extreme pretty much since here, right? And this is where we began to talk about the Japanese yen and the idea that the Japanese yen futures could start to sell off, right? Because the market is at an extreme. But we talked about the fact that it wasn't really at a significant level. So you've got to try and put all these things in place. Now, the significant level for me was here, right? Because we can see in the past, big sellers have come in at these points. So I like the idea of selling Japanese yen now around that sort of level, which is that 140 spot 50 level on US dollar Japanese yen, right, which is this 140 spot 50. Now, do I think that the market is going to completely capitulate and we're going to see yen futures all the way back down into these lows? it's a possibility. Do I think that's going to happen? No, I do think that the dollar is going to remain fairly weak against the Japanese yen. So I'm looking more for a move up into sort of 146, 148.75s, and maybe see yen strength come back in. But we did get some really interesting data actually today. So we had the BOJ interest rate decision. Came in at 0.5. There was no change, and that's what is expected. Okay, there was no sort of expectation of them to hike rates in this meeting. Now there was some interesting points made by Bank of Japan Governor Ueda, right? And one of those things was the fact that underlying inflation could cool down due to the tariffs and slower global growth, right? So why are the BOJ hiking rates? It's because inflation in Japan is rising, so they want to try and hike rates to cool inflation. But there could be a situation where tariffs and slower global growth does that job for them, so they don't need to hike interest rates. So the market may start to think, well, actually, if they don't need to hike interest rates, then the Japanese yen may not carry that sort of weight in terms of the reverse carry situation. So this could be a good opportunity to sell Japanese yen in the short term, right? And then wait for further data. So a big part of this was this part here, right? So I'm just going to highlight this whole area, and I'll talk you through it, right? So here it says the remarks on slower growth and softer price pressures are aimed to justify the pause today and perhaps in June as well. It's no doubt a more dovish take. This is from Justin Lowe on Forex Live, by the way. Analysts are largely seeing Q3 as the next point in which the BOJ will hike, right? But we'll have to see how the narrative changes depending on Trump's tariffs as well in the weeks and months ahead. And then there was some other headlines as well out of Forex Live 2. I think I've not got it on the screen, but we're going to take a look at those. What was the other headline? Oh, here we go, right? So BOJ Governor Ueda says would expect US tariffs to be above base 10% levied, right? So Ueda made another comment basically saying that if tariffs were low, it would give them more of an opportunity to hike rates. But now he's kind of said, above the base 10%. So is anything like 10% and below the signal for them to hike rates? Is it 10% and above is a signal for them to leave rates unchanged, right? That's the one thing we need to kind of look into next. And I think that's what all markets are waiting for. Are tariffs going to be implemented? We've had a 90-day pause. Will that get extended? Maybe, probably, considering how the bond market reacted last time. But for me, we've got this kind of situation going on with the Japanese yen where we're at these key critical levels on the futures chart, which is this 140.50 area here. They are buying Japanese yen at levels we haven't seen in history. So that is always a warning sign for me. Why are they buying? Because there was plans of hiking interest rates. Well, if that's going to go away now because of tariffs, could we see this unwinding of the yen essentially? So we'll see how it's reflected in the currency strength meter. But we've kind of got the triple threat there. You've got the commitment of trade reports showing a signal of an extreme, right? Hedge funds buying extreme. You've got the strength and weakness showing us that we are starting to see weakness in the Japanese yen. And then we've got Governor Ueda from the Bank of Japan kind of backing at the fact that there could be a possibility that maybe rate hikes don't even come. So that's quite interesting to me, and I think that's why we're seeing a lot of this sell-off in the Japanese yen at the moment. We're also seeing kind of volatility heading back down towards the 20 level. Stock markets have been doing pretty well as well. You know, S&P, NASDAQ pushing higher. I did take a look at the Nikkei as well, because I thought, well, if the Japanese central bank isn't going to hike interest rates, that could be pretty good for the Nikkei. That's having a really good day today and has had a really good few weeks as well. So maybe the Nikkei could be something to look out for going forward, because this has been the sentiment around the Bank of Japan. Well, this is the intervention. This is Japan talking about hiking rates, and that kind of drove prices lower alongside all of the sort of markets really at the start of this year. But yeah, the growth here has been kind of stifled because of the chances of a rate hike. But if they diminish, that's usually good for stocks, you know. So we'll have to keep an eye on the inflation data coming out of Japan. Tokyo core CPI will be one to watch as well. And if we do see some real significant changes, some elevated inflation figures, then they probably will act. So that could be, you know, the catalyst that brings the Nikkei down a little bit lower as well. But for now, it's looking pretty bullish, you know, as well with the Japanese yen pairs. You know, looking at what other did we have? So we had Kiwi yen, Euro yen, Pound yen, Aussie yen, Euro yen starting to break a little bit higher. I did put a little kind of tester one on here. I didn't take this one. I didn't like this one compared to the others because of the chop, right, that we were having. So I didn't technically put that one on. But it was just something I marked up to see how that one would have done. Same with Aussie yen. I put this on just to see how this one would have done, but I'm not as confident buying Euro yen and Aussie yen as I was the other two. So we'll see how this one plays out. You know, and then I can record what happened after. You know, would it have been a viable trade essentially? So, you know, Euro has been fairly supported as well. I'm kind of keeping an eye on this Euro Aussie market, seeing if we might get a little bit of a breakout to the upside there. But really speaking, you know, Euro, I like it. Euro dollar, I like, but I had a look at Euro dollar earlier and it actually looked a little bit more bearish, right? So again, I just kind of put this little trade tracker in. It looks like an inverse head and shoulders pattern, or not an inverse, sorry, a head and shoulders pattern. We have the left shoulder, head, right shoulder. We broke through that ascending trend line support there. So it looks to me like there could be an opportunity to see a little bit of Euro dollar downside to come, right? Currency strength for me to assist me with reversals, how to watch the weak currency against strong ones and paying attention to price action. Nice, right guy. Well, I'm glad that's helped, you know. I'm glad that's really helped. So yeah, nice little potential breakdown. Now we do have some US figures coming up shortly. We did get the unemployment claims, the recent ones, came in at 241, which was higher than the previous 223. Forecast as well, 224. So that's technically poorer. So, you know, we've got NFP coming up. NFP could be a big catalyst because I don't think the market may be moving narratives, right? Like the tariff situation's kind of died down a little bit, hasn't it? There's not been as many sort of headlines out of tariffs that have really kind of shot the market. So maybe the market is now starting to ignore, not necessarily ignore, is ignore the right word? I don't know if ignore is the right word, but maybe kind of nullify the impact of tariff headlines. But now they've got to start pricing in how the tariffs are going to affect things, because in history, when countries go and they negotiate with each other, we don't really see a lot of, you know, change, right? We don't really see negotiations happening very quickly. They usually take a long time. And if that's the case, then it is going to kind of stifle global growth. And that is going to impact markets, because If it impacts growth, then it's going to impact, labor figures. So, we do have non-farm payrolls coming up. Now, the non-farm payroll data is forecast to come in a lot lower, right? So forecasts are 228. Previous was 228, forecast 133, which, I wouldn't be surprised if we see a fairly negative number going into tomorrow. But I expect actually them a little bit later down the line. Let's have a little look at equity clock, right? And we can go on seasonality here, and we'll have a little look at sort of the seasonality when it comes to employment. So this is the non-farm payroll seasonality chart. So usually in March and April, we see a bit of a tapering off anyway. So that can be compounded, right? So if we got like negative jobs figures, then you would think that that would impact the US dollar in a negative way. Now, what would be interesting is if we had sort of fairly negative numbers, but the dollar strengthened, because that means that move has been priced in, right? So that would be interesting. Right, guys, I think the dollar might reverse. We've had negative news and the dollar didn't drop lower at all. NFP hits and it's bad, and the dollar doesn't drop. I'll go long dollar. Yeah, you've just basically summed up what I was getting to there. I think that's a fairly decent idea. I think if we do see more negative data out of the US, but the US gets stronger, then we could see euro dollar back to sort of 112. Maybe even a stronger reversal there, because it has been oversold for a while. It's just whether that sell dollar theory has gone away, and it might do. We've actually seen bond yields starting to react a little bit more normally. So if you take a look at the 10-year yield, for instance, when we had that sort of separation between the US dollar and the 10-year yields, that has started to come back. Now, I did say you'll probably see one catch up with the other, and it looks like the bond yields are kind of catching up with the price of other assets at the moment. So yeah, it'd be interesting to see if that continues to be that way. Whether we see bond yields starting to catch up now, but that means bond markets are moving higher. Bonds are moving higher. So if we look at the fixed income side of things, we can see bonds are moving higher here. This is the 5-year, the 10-year, and then obviously you've got the sort of longer end and the short end, which are the 2-year bonds, and they're moving higher. So that means that usually you see an inverse relationship with the currency. So, at the moment they're moving higher. Dollar hasn't really gone anywhere. But, if we did see sort of like a decrease in the bond market again, maybe dollar will get a little bit of a boost from that. So we'll have to wait and see. So if we kind of if we go back to the bond yields here, what we can do is I like to look at the correlation between the US 10-year and dollar yen. They usually follow a fairly strong path, but right now that correlation is not necessarily there, right? So let's go to a line chart. Let's regulate that. Let's see if this opens up. There we go. So usually you see a fairly strong correlation between the two, right? So when yields rise, so does dollar yen. When yields fall, so does dollar yen. When we had that separation, and that was in regards to all the tariff sort of move, right? So we had that separation, and that kind of continued, right? Because you started to see bond yields fall again, but dollar yen is actually starting to push higher right now. right? So we've still got that kind of separation between yields and dollar yen. So trying to actually, thinking about it now, trying to actually use the 10-year yield might not be the smart play at the moment. We'll have to wait to see if this correlation starts to form again, because usually it is a pretty strong correlation. You know, you can look left and you can have a look at when, you know, 10-year yields move, dollar yen moves, and they can move sort of a little bit ahead of time, the bond yields. So usually there is a fairly strong correlation between the two. Now this is an interesting part. So you've got kind of a separation here, right? But bonds usually do move first. So you've got bond yields moving higher, dollar yen still continued to push to the downside, but then dollar yen went and caught up with those yields. So that's quite interesting. That's around 2020, so that's got to be sort of COVID-y time, I guess. Yeah, March, February 2020, sort of going through to 2020, end of 2020 there. Look, there's a big move here as well. Back in 2018, you've got significant drop in dollar yen, but bond yields continue to rise. Dollar yen then went and caught up with that, and then they kind of followed that sort of similar path again. So there are times in history where they do sort of separate and break apart. So it looks like this time the yields are trying to play catch up with dollar yen. So we'll keep an eye on that. We'll see if we do get some kind of more development there. I do like to use correlations when looking at the market. So, you know, we'll see if there is a strong correlation coming back. Oil starting to spike a little bit higher. I think if I get a daily close above these lows here, I'll probably exit that position, because I actually looked at the COT reports when it comes to energies. A little look at crude oil, and they are also kind of reaching a point where you could consider it to be extreme, right, on the short side, which was here down at these lows. I don't know if you can see that actually, sorry. Right guys, message in the way there. Down towards those lows there. So usually when we get a bit of a spike into this area here, that means that hedge funds been extremely short, and you could look for potential long ideas, right? That's extremely long, we go short. That's extreme short, we go long. And then you got all the other bits in here. So go short when they're extremely long, here and here. Go long when they're extremely short, right? Here and here. So we're extremely short again, and the market is kind of coming into this 57.50 level. So that's kind of like a double bottom that's forming, right? So I do have to be aware that this situation here could start to spike up, and we could see a little bit of a recovery in oil prices when you look at the commitment of traders on their own, right? So we'll keep a closer eye on that. You know, if we can get sort of support in here, you know, maybe we do look for eventually kind of changing tack there on the market and have a look at some bullish moves. But I need to see some more evidence that was going to happen, right? Although you've got this kind of really lovely reversal candlestick pattern there, I would like to see maybe like a push up and then the push back down, and then maybe another break of trend, and then that would kind of convince me that, yeah, okay, maybe we are starting to see a bit more of a reversal on oil there. Whoops. I need to do that. Is that 4-hour close there? Let me know as well, guys, what you're trading this week. I'll be interested to see what you guys are up to. Obviously, I'm very interested in how the US dollar will play out for the remainder of the week. If we actually go back and have a little look here at the sentiment, we do have an extreme as well coming on the US dollar, and we did talk about this on Tuesday. So, you know, looking at the reports, they increased short positions further on the US dollar, but did also add to their long positions. and this is the April 22nd data. So we have got sort of an interesting scope there where you've got them adding technically to their shorts on a net position, but they are coming into a 52-week high here on the dollar index as well. So, you know, dollar potential reversal is looking quite likely to me at the minute. It's looking quite likely. Hi Dan, you are long dollar yen and CAD Swiss. Nice. Dollar yen, yeah, looking pretty good. CAD Swiss also probably starting to have a nice little push up to the upside. Yeah, I think that's on the strength meter. I don't think CAD Swiss is. CAD I actually did like. I've put a bull cot signal. It might actually be it's a bear cot signal on CAD Swiss. Let's have a quick look at that. Why have I done that? Oh yeah, because look at the extreme here. They added 16,000 contracts, and they did it by decreasing short positions very, very aggressively. So minus 16,000 contracts on the short side, only 92 on the long side. So this tells me that they're not really actively adding to long positions, but what they're doing is they're just reducing shorts. Now, obviously, Canada have gone through a whole sort of situation this week where they've had an election. The Liberal Party won with Mark Carney, and there is more of a sort of nationalist situation going on there because of Donald Trump, and Donald Trump basically trying to claim Canada because of its natural resources, right? So, you know, that is interesting that they're loading up on that. You know, considering where oil prices have gone recently as well, we could actually start to see a bit of a negative swing here. But they are approaching a 52-week high as well when it comes to contracts. I think, again, the only thing for me really, or one thing that I looked at was we're not really at a significant level, very much like what we were talking about with dollar yen a while back, right? So you've got on the reports here, this is the previous extreme which formed back in September of 2024. How does that relate to the chart? Well, it's this area here, right? And when I look at that, that's around about that 74 level, right? We're not really at a point, right? I think the level for me would have been if we'd held below 72. I'd have been interested in being short, but we didn't. We broke through it. We breached that. We're getting a bit of bullish Canada because of the situation with the election. But if we're going to see Mark Carney and Trump butt heads, it's going to be bad for Canada, I feel, because they rely really heavily on the US for trade. And are they going to find that trade elsewhere? How are they going to make up for that trade if we start to see them go in sort of tit for tat? And if we start to see them kind of go full-blown trade war as well. So I thought that maybe Carney would want more of a deal with Trump because he's more of an economics guy. But that doesn't seem the case. So I will be keeping an eye on the Canadian futures because I do think that, you know, we could see some short-term gains here, but this would probably be my point of resistance where we had that really long sell-off in CAD futures. I think if we get near the 7,400 level on the futures market, I'd be looking to sort of buy US dollar CAD around that point. And if we look at where dollar CAD is trading right now, you know, again, we're not really at a significant point. So that double top there is represented here around about 134. So it's actually sort of this area here, right? So I do think that CAD has a little bit more to go because we're not really at a significant point. But if we saw them increasing their contract size, let's say to this extreme that we had back in February, which is kind of this area here, right? then I would be very interested in being a buyer of dollar CAD around that area. Or let's say we got back below the 72s, which would be back above the 139s. You know, that could be a good long in there at the time. So that's also something I'm going to be very aware of. I don't know how CAD has been performing recently. I need to set up a fundamental tracker for CAD. But if we go to trades and economics, oh, this is an interesting story, isn't it? So the United States, I've just got distracted, but the United States challenger job cuts. US-based employers announced 105,000 job cuts in April, down sharply by 62% from March's 275,000, but still 63% higher than in April 2024. It marked the highest total for the month since April 2020, when a record of 672,000 layoffs were reported. So far in 2025, employers have announced 600,000 job cuts, the most for this time of year since 2020. That's mainly government due to Dodge-related cost cutting, as well as in the tech and retail sectors. Though government cuts are front and center, we saw job reductions across multiple sectors last month, said Andrew Challenger, Senior Vice President at Challenger & Gray and Christmas. Companies are generally pointing to economic uncertainty and the adoption of new technologies. Many employers are taking a wait-and-see approach. So again, this makes sense. We're probably going to see a slowdown in the US because of all these unknowns, right? If you've got a guy in power for 4 years, but he's telling you that you've got to go build your plant in the US, is it going to cost you more to build that new plant in the US, or is it going to cost you sort of less to just pay the tariffs that they're looking to pay, right? So it might be worth, from a business perspective, as a businessman, to look and go, well, we might as well slow down hiring because we don't know where it's going to go, but at the same time, we're going to take a hit on tariffs. So what's the first thing that companies do? They lay people off. That's the first thing they do. So if we start seeing mass layoffs, then that's going to be interesting. Interesting that was March, considering what the price action has been throughout the month, of March and April, seeing these layoffs coming through. So, that's obviously going to have compounded that dollar weakness we've seen recently in the market. But yeah, let's go back to CAD. I was looking to see how where do I need to go? Countries, right? Here we go. Canada. Okay, let's just have a little nose at what's happened recently. So GDP growth rate was good, 0.6, right? So that beating out sort of Q2 2025 there. Q3. Oh, these forecasts, they're not just actual. Oh, Canada forecast. I don't want the forecast. I want just the data. I was going to say third quarter 2025. That must be they must be time travelers. No, that's not what I wanted to do. Am I missing that? Where the hell is it? Oh, countries. Here we go. Canada. Don't give me the... Yeah, okay. Last and previous. Right. So last was 0.6, higher than 0.5. That's good. GDP growth rate going higher. Annual GDP growth rate 2.4 versus 1.9. That's good. That's good. Unemployment rate's gone a little bit higher again. That is one problem that they have had, though, because of the higher rates. Higher prices, just in general, because their inflation is still at 2.3%, not below 2%, still at 2.3%. Although inflation rate month on month did come down a fair bit. Interest rate is still fairly high at 2.75%. balance of trade is negative. And obviously we know Canada's a good sort of importer and exporter. Manufacturing PMI. Retail sales were pretty good as well. So actually the data out of Canada isn't too bad right now. Just looking at the sort of main macro indicators. So I can see why hedge funds have been buying it recently, because the data has been pretty good. Let's have a look at pound CAD. Pound CAD's the only one that's down. Yeah, not feeling that one. I think the one market that I would like to buy is Kiwi CAD. I think if we did see that flip on the Canadian dollar, this would be a market I'm really looking to get into. Hasn't set up yet, so I'll keep an eye on that one. Keep an eye on that one. Right. You're in a coffee short, EuroCAD and pound CAD short. I like it, right, guy. I feel like you're very active right now. Coffee short. God, I have not looked at the coffee chart in a while. Let's have a look-see. Oh, nice. I've not looked at this chart. Nice little sort of double top here on the weekly. Is there anything on COT reports showing you to get short on coffee? No, not grinds. What am I doing? Softs. Oh, yes. Oh, actually, no. Are these... Wait, are these... Is that commercial pricing? Where's that gone? Go back. Large speculators. So large speculators are holding a very large short position, aren't they? Well, they're not really, actually. In the grand scheme of things, they're not. This would be an extreme short here. That I would not consider an extreme short. It's an extreme short considering that's the lowest they've been since 2023, but no, I don't see that as an extreme, to be honest. I'd rather follow that. The idea that that could go short. That's quite a good little spot there, Raga, I think. I do quite like that. Let's have a look. Obviously, commercials are just going to be the opposite. They're just going to be buying it up fairly aggressively, which is interesting, considering where price is. Why do I keep clicking that? What? Oh, okay, I don't click the little sign. That's why. Yeah, what are commercials doing? They're buying it fairly aggressively, but again, it's an extreme considering where it's been in the past. But that would be my, extreme. They're going to buy it as price falls. So, although we've been rallying for the past 3 weeks, and they're still buying that move. I don't know what's going on with the old coffee crops this year. Have they had a good season? Have they had a bad season? If they had a good season, then that's usually good for selling coffee. If they've had a bad season, that's usually bad. That's why we had this kind of move through here, because there was reports back in November of last year that there was a undersupply of coffee. They had a really bad harvest. There was a lot of diseased coffee crops, and that's what saw this huge exponential move in coffee prices, very similar to that of orange juice. But it'd be interesting to see how climate change kind of factors into this, whether we'll naturally just see higher prices of kind of like our softs and grains and things like that, just because the world's getting hotter, there's more extreme weather, you know, maybe crops are going to be bad because of that. So, you know, that'll be interesting. I don't know if everyone's ever researched into sort of climate change investment strategy, but they are out there. They are out there. So that'd be interesting to kind of have a little look into. Is there any other extremes really rocking about? Cocoa, there's a potential cocoa extreme. Yeah, nice. Just like a little technical break. I like that. Let's look at cocoa futures. Cocoa futures have also been very, very high. You know, look at that. As you know, if you invested into cocoa in 2023, this is a weekly chart. 331%. Nobody really, I don't feel like nobody ever really talked about that. You know, the move in sort of cocoa, orange juice, you know, no one really kind of talked about those moves. The cocoa also kind of reaching an extreme as well. I don't know if it's the season for these. I'll have to dig into that another time. Large speculators getting very bullish on the Nasdaq E-mini. Very bullish. Decreasing longs, increasing shorts. That's quite interesting. Look at the VIX. They're actually adding quite a lot of long contracts into the VIX. Decreasing short. Well, they've decreased shorts and longs, but ultimately added to their long positions there. I always get a bit wary when the VIX enters this kind of territory. Let's have a look. Because if the VIX is going to fly, then, you know, they were extreme long here. And then look what happened. Bang. Big move. Although this is what you really want to see. You want to see them at extreme shorts, really. You get these little pops. You can have a look at trying to trade those indice moves off the back of it. So really speaking, we could expect a further decline here. Further decline in the VIX. That could be sort of your likes of your stock markets higher, you know, Nasdaq. Yeah, honestly, the stock market is not a place that I want to be involved. You know, at the end of last year, I was very much like, I'm going to get involved with some stock moves. I've invested, so on the dip, you know, when we had that dip, I've invested into some stocks, but I haven't actively sort of traded them. You know, again, I don't necessarily think this move's done. The only reason, because I just think that we haven't really had the full impact of the tariffs yet. You know, how is it going to affect the labour market? You know, if we start to see continual weaker data, how is that going to impact us? Now, obviously, yesterday we had poor data, and the market still closed higher. So that wasn't, you know, that wasn't necessarily a bearish move. Really, I think, you know, if we look at the day that panned out yesterday, it was having a sort of down day, and then the news came out and broke, and we had a complete reversal of that. So yeah, really interesting dynamics here going on in the market. I don't really think the move's done, but I could be wrong. I could be wrong. But I have invested on the dip. Yeah, VIX between 20 and 29 makes a lot of sense. Any higher than, well, usually it's any higher than 25 or 30 you'd be really concerned about what's going on. You know, it's quite interesting. Obviously, I did a video at the beginning of the year kind of talking about what I think one of the best strategies would be the volatility selling, right? So if you saw the VIX rally, you know, buy stocks basically, or trade the stock market. And that strategy would have done pretty well because, you know, looking at the sort of spikes that we've seen on the VIX, you know, back here in 2024 as well, you know, that would have been this move down. And look how, you know, if you'd bought the dip there, that would have done pretty well. We obviously had a recent spike up into 40, which is this move. If you bought that move, that would do pretty well as well. So, you know, that was probably, you know, for me, that was where I wanted to really focus a lot of attention. Was trying to spot them type of volatility takeoffs and then how the market kind of reacts after that. But I haven't got involved with this one directly in terms of trading it. Like I said, I've invested in some companies. I've invested in some companies as well that, you know, this is just personal, that have to do with oil as well, because oil is obviously dropping. So I've bought a few sort of airline stocks recently, as well, when we were kind of dropping through here, which have done okay. So yeah, I mean, look at the crypto market though. Look at the crypto market. Not really holding up against the risk profile at the moment. Although volatility has been falling, so, you know, maybe I have to say that lightly. You know, volatility has been falling, and the VIX and Bitcoin has been rising. So, you know, that's something I would consider looking into as well. Maybe, you know, Bitcoin coming back up into the 108s. I think if you get that, that's something that's basically telling us that, you know, there is still risk appetite in the market, you know. So no, don't do any options trading. Predominantly CFD, but also do sort of just in, you know, stocks and shares and stuff. I mean, you can see how Bitcoin has really held that 50 weekly moving average. You know, good place to be a buyer of that move. Want to note for in the future. Right then, guys, we've been going for an hour. That's the usual time where I kind of pack up for the week and then say I'll see you next week. But I will not be seeing you next week. I won't be seeing you on Blueberry channel ever again. So thank you. Well, never say never. Maybe sometime in the future at some point. Maybe I'll make a return if Blueberry ever want me back. So yeah, I like I said on Tuesday, you know, just really appreciate all the support that you've given me over the years. You know, it's been great. I've thoroughly enjoyed, you know, doing the work, and you know, it's really nice to actually have. On Tuesday, I received quite a few messages, just, you know, saying thank you, and that was something that I really appreciate. You know, that's what I do it for. You know, I do it to try and not only help you guys, but also, you know, help myself. You know, whenever I talk to you guys about markets, it's reaffirming those things in my own head. So, you know, that is, you not only have I helped you, but you guys have helped me. So I just want to make that point before I go. So thank you to everybody. Link to my profile. You can catch me on LinkedIn. I'll just drop it in the chat there if you want to come and say hello to me. But yeah, I know the guys have got some exciting stuff coming up for the channel, so please don't go anywhere. I'd hate to see you leave just because I'm not there. So, you know, stick around to the channel. They've got some exciting stuff coming up. I've got a video being released tomorrow, so check out that one. It's all about Japanese yen. I'll go into a little bit more detail than I have today, so stick around for that one. But yeah, that would be my final. This will be my final sort of send off. So, like I said, thank you to everybody. I really appreciate you all. All the best to you guys as well. I hope you have, you know, I hope you continue to to stick with trading, and I hope you all have successful journeys in it. Whatever you do with it, you know, remember, it's not the get rich quick that everybody says it is. Think about the long game. Think about the love for it. You know, keep that passion for it. And if times get tough with it, you know, just think about the 3-step process. You know, why do you want to be in the market in the first place? You know, what is the key driver behind these markets, and you'll do just fine. So thank you, everybody. Appreciate you all as usual. And yeah, I would say speak to you soon, but I will not be speaking to you soon. So thank you. Bye.